Hey guys, thanks for requesting the video as far as information provided for folks that are looking to buy vacation homes, second homes, luxury homes, those sort of things. My colleague here, Scott McCauley, and I'm Jason Perry, going to go over some of the particulars that you want to keep in mind, some of the steps that are required, and really more of the nuances that are available or part of this kind of a product, more so than someone looking to buy a standard conventional single-family primary home, and really what it relates to folks who are in your scenario looking for a second home or vacation home. So just going to hit some of the frequently asked questions and some of the nuances. If you want to kick us off, that'd be great.
Yeah. Well, I think in today's market, there's a lot of properties that are for sale out there. Typically, we're in the New England area. We do see a lot of multifamilies that are out there. So I think in today's market, some savvy investors are possibly saying, okay, I've got some disposable income.
Right.
Possibly I have a son that's going to college or something like that. Hey, can I buy a duplex up at XYZ college, which I did not go to, but they're looking to go ahead and they're trying to say, okay, here's my situation. How can I make it better? So a second home, investment home, something like that. And obviously even a vacation home. Those all roll in together. So typically, I think we see a wide range of programs, wide variety of programs that are available for stuff like that. So maybe you can kind of speak a little bit to some of the bigger ones, some of the most major loans that people can get for these types.
Well, one thing we want to do is we want to kind of separate the group that we're talking about. We were talking about this before, that second home, vacation home is a different group than a luxury home. It could be a different group than a luxury home buyer. In our eyes, we're thinking luxury home buyer are going to be basically jumbo and above, which are really 417 and higher. And then we have those who are looking for second home, vacation homes, those sort of things as well. Now, really, it depends on the type of property. Are you going to live in the home as your primary occupancy, or is it a second home? And then comparatively what the size of the transaction is. Using them just in some broad brushes, you have your jumbo programs, which are a little different than, again, your conventional loans, which are 417 typically and up, 417,000 and up. Once you get into seven figures, this is for luxury. Now you're talking the super jumbo world. And as you move up that scale, you become more restrictive, more specific. Down payment requirements typically increase.
And the reason being is that a lot of the financial crisis right now, a lot of blame, should we say, is out there on some of the McMansions that are out there, some of the more expensive homes where people basically got into a home for a high five and a heartbeat, and now they're not making these payments. So I think you see a lot of, and we were talking about some of the bank-owned properties in another video. We're talking about a lot of those that have basically been walked away from. So again, we're kind of talking maybe why are things so difficult? And some are more stringent to go ahead and get a jumbo.
Well, talk about that as far as so we talked most of them, and again, we're very experienced in this world, so any questions, please contact us directly. Our contact info is going to be after this video, and the reason being is every scenario does have its nuance.
Things do change.
Completely. Shoot, on a daily basis. But as far as down payment, talk about that. So down payment comparatively versus a 3% down owner-occupied primary house. What's the difference on this?
So some of the jumbo programs, typically you're going to have about a 10% down payment that you'll need, okay? In the lender's mind, in the lender's world, their mind thinking that, okay, this is a higher price home, there's been a higher default ratio on these homes, so we're going to ask you to have a little more up front to go ahead and get
a little more skin in the game.
Compare that to some of the other home programs that are out there for a conventional home, for 417, as we say, 417 and below. You're typically talking with a VA loan, you can get 0%. We'll allude to that a little bit in a little bit, because you can indeed get one of the luxury jumbo homes with the VA program. That's coming up. We have the FHA program where you only need 3.5% down. That's for conventional. And then the actual conventional loan programs where you do need 20% down. So when you compare it to everything that is out there, it kind of splits the middle a little bit. Sure, there isn't that low down payment option, but you do have the ability to not throw a ton at it.
And mind you, in that same breath, if you're buying a home for $800,000, because of the risk, they're looking for 80 to 160 grand, depending on 10, 20% down, whatever the particulars are. And the reason being is you are buying a larger level. So, and one of the points we just brought up is you do have the ability, if you are a veteran, first of all, thank you for your service. And the key part of that is you do have the ability to go above that 417 limit with a VA loan. We can get into the particulars, but ultimately what it means is above that figure, you have to put 25% down. So if you're buying a home for say 417 is the limit, you're buying a home for 517 for round numbers, $100,000 over the conventional limit, you typically have to put 25% of that $100,000 down, which is $25,000. So if you're buying a home for $517,000, you're putting $25,000 down, which is basically less than 5%.
Right.
So that's the VA loan. That's an opportunity there to get underneath that 10% that's standard. How about second homes, vacation homes, things like that? What's your thoughts on as far as down payments and such on that?
Yeah. You know, typically most of those homes are available with most of the same lending criteria. What we'll do is, you know, it's our job to make sure that you're a strong borrower.
Sure.
So what we do in looking at that is basically take a look at what sort of income numbers you have and compare them to what sort of debts that you have. So the numbers don't lie, as we like to say, but at the same time what we do is we like to go ahead and go through those numbers with a fine-tooth comb. Make sure that the numbers are indeed telling what the story is, and you know, it's kind of our job to make sure that that the numbers can actually benefit you and put you in a good spot.
Exactly. And one thing that you run into outside of the asset side of down payment is you also typically have a larger degree of money, and this is on luxury, a little bit on secondary homes, but you typically have to have a larger set of reserves in the bank after you do put that down payment on the home as well.
Typically 3 to 6 months is kind of the going rate right now.
Sure. And again, changes on a...
So reserves again means, you know, we're talking about a monthly payment.
Sure.
So reserves are 3 months of that same monthly payment set aside before the loan closing.
$3,000, you know, $18,000 is 6 months. That's how they look at it that way. There are some programs that are out there for secondary home buyers and such, some programs like HomePath. If the home is owned by Fannie Mae, if it's a bank-owned home, you can buy that for typically 5% down for a second home.
That's a great program.
Oh, fantastic. No mortgage insurance, a whole slew of benefits that way. But they have to be owned by Fannie Mae. They have to be basically a bank-owned, owned by the government agency Fannie Mae. You can find out homes at homepath.com. As far as the property itself, second home, vacation homes, tell me a little bit about condos. On the what are some of the pitfalls or things you need to look at in the condo world for secondary homes and things like that as well, vacation homes.
Very popular, obviously, item for the ski buffs, people down at the beach, all that sort of thing. Condos are kind of unique in the lending world. We like to look at them on 2 levels. Basically, one, what you're buying as an individual abode itself, and then obviously you're part of a community as well. So what we'd like to do, obviously, is make sure that the home will actually appraise for what it's worth.
Sure.
Make sure that everything is sound on the inside. And then what we look at, again, is the whole kind of community, making sure that it's a sound community. So above and beyond getting the actual property that you're going to live in approved, we make sure that there's a sound investment to be had within that actual community. So we will go deeper. We will look at the actual condo docs, make sure that there's insurance as a whole on the whole properties. So we dig a little bit deeper, and that condo association typically does need to be approved.
Correct.
So we do our work that way. So a little bit different, you know, depending on the loan program that you're using. There will have some advantages to going one way or another, but you know, they're definitely, you know, everybody's obviously looking to have that second little townhome on the mountain, so we can get condos done absolutely.
Sure. And that's such a great point, because the financial stability of a condo in particular is of key importance, because again, if your neighbors aren't paying their bills and they're not throwing money into the kitty for when you need those renovations, rehab, upkeep and such in the condo complex, it will affect your ownership, because now you're not getting painted as well as you should, and you're we've seen issues, and that's the other thing on some homes where the chimneys are a little old.
And frankly, you don't want to buy a home, as much as you love the way that home looks, that condo looks, you don't want to buy a place that isn't going to replace the roof when it needs to be, that isn't going to paint when they should, and rot will happen.
And when that thing's going to sell, it's all beat up. So
exactly. You want to get your money back. So.
Completely. So basically, again, so luxury homes, just to kind of recap here, luxury home buyers, again, you have jumbos that are over 417, you have super jumbos that are typically 7 figures, down payments on those typically 10%, you have a reserve requirement that you want to be aware of. Also, ratios as well could be tighter, so the dollars that you bring into your house, as far as how much goes out for debt and housing, you got to be careful of.
Sure.
VA loans, conventional loans, we talked about VA loans and jumbo loans we spoke of. Secondary home buyers, again, you're looking at a little bit less of a down payment requirement, a couple programs that are good for those particular situations. Even for better deals, homepath.com, some of those. You don't necessarily have the reserve requirements like your jumbo loan, but you do have additional restrictions and such that you want to be careful of. In the order of importance or cleanliness in the lending world, primary homes are the simplest and the easiest to look at as far as cleanliness. It becomes a little bit more muddy when it's a second home or a vacation home. And then third is the investment properties and such. So they are looked at a little bit under more of a microscope of the primary homes.
And add condo to that.
Completely.
With each caveat that you know, we will dig a little bit deeper.
Completely.
So and that's important.
Completely. Anything else you can think of to add to this as far as?
You know, I think people might get lost maybe on the loan process itself. It's a pretty simple process. albeit, today's lending world is not the easiest to navigate.
Sure.
I think that's where we come in.
Sure.
What we like to look at is obviously qualifying the borrower, qualifying the property, and obtaining an approval for both. So
exactly. In our
keep it
other
on those
videos, we
simple
have some of
levels.
those particulars on that too.
Absolutely.
Yeah.
Yep.
And that's a key point of making sure you got a good team around you that's going to support you. So
That's it.
thanks very much for watching our video. We hope we can answer those questions that you had here. And if you have anything else, just give us a call.
Yep.